Hi there, Serial Trader here. I want to do an update on Bitcoin, and I'm just going to start with the larger time frame and work from there. So this is what I'm still currently tracking, and that's where we had this low in December of 2018, and we had this initial impulse wave up for a wave one into June of 2019. We had our corrective wave two down to March of 2020. We had this third wave that ended close to 65,000 into April of this year. And now I believe we are still working the fourth wave correction to match up with the second wave over here. And I'll go through the two scenarios I'm most closely, watching or favoring. And right now I'm in log scale, so that brings the percentage moves into a more proportional look than just the absolute, linear scale moves, which obviously, once the scale starts changing too much, you start to get a pretty distorted looking chart, but you can bring it back into proportion if that happens on log scale. So we'll stick with log scale on this time frame. Then on some smaller time frames, we can certainly go back to linear scale. Okay. Now, some things to look at here in the wave 4. Now, typically, your wave 2 and wave 4 will consume a proportional amount of time, and often wave 4 consumes more time, if anything, than wave 2. But let's just use that as a bit of a guideline or benchmark. And let me just get out here. And, okay, so looking at the time relationship, so we'll just measure the amount of time that was consumed in wave 2, project off of where wave 3 ended here. And if wave 4 just simply lasts the same amount of time as wave 2, that would bring us to roughly the end of December of this year. And it doesn't take a whole lot of searching to find that you often get important either highs or lows around that time, December, January time frame in Bitcoin. So I like that we have some relationship or confluence lining up there. Then we can just simply take the amount of time. So I'm calling this 1, 2, 3, 4, 5 down for the initial wave A of 4. So if we measure that as the bottom of A, or when A ended, and just project out the amount of time that A consumed off of where it appears that B ended here, that would put us a little sooner into, let's say, maybe mid-November of this year. But again, not so far away from that December time period of wave 4 being equal to wave 2. So a couple little, time things to look at there. Okay. And then we can do now keep in mind I'm in log, so this will influence the way this channel looks and acts and all that. But let's just do the experiment, and that's where we'll draw a base channel where you connect the origin of wave 1 with the termination point of wave 2, projected off the peak of wave 1, and that gives us kind of a upper boundary line that served as resistance and may then serve as support on a corrective move down. And I'll get to why I want to throw that in there for some other things. We'll do a fib retracement of this third wave. Okay, and let me just get rid of the zero level there. Now what we need to do for this to work is put the fib retracement into be reflected the log scale. Okay, so now that we're doing log scale fib retracements, things start to look a little more interesting. And that is where, so typically in a fourth wave, the most common fib retracement is 38.2%, and the next most common would be around 50%. So 38.2% retracement in log scale of wave 3 would bring us to 22,369, and a 50% would bring us to around 16,000. Now let's do some other things. Let's make a couple assumptions that this is our 5 waves down for A. Now it's interesting how you can count this B wave, but let's just say it's 3 waves up for the B. Okay. And then we'll do some AC relationships, and again, make sure it's based on log scale. And okay, So in log scale, if the C wave were equal to the A wave from where the B wave just peaked here, that would bring us down to 23,859. Again, not so far off the 22,000 and change that the 38.2% retracement of wave 3 gets us, and also fairly close to lining up, depending on how the time works here, with the upper trend line of this base channel. So I'm starting to see a confluence here around this, we'll call it the low 20s area or so. One thing is also just, classical chart resistance would be the prior high here, the 2017 high close to 20K. That is certainly in play. Now, one thing I'll just draw out here, not because I think we're going there, but just as a important note, if this is a fourth wave to match up with the second wave, then in part of a 5-wave sequence still in development, then the fourth wave cannot go down and take out this wave 1 extreme, which on the Bitfinex chart here is, let's see, 13,764. So we got to stay above that. Now, I happen to think we will, and probably quite comfortably. Even if we got down to 16,000, that's still a good distance away from 13,000 or so. But that's just the line where this wave count kind of falls apart, okay? I don't think it's going to happen, but it's just good to have there anyways, just to show that. I'll get rid of it now that I mentioned it. Okay, now we could also just throw up a parallel trend channel for our ABC here. And again, you can see some nice kind of things lining up, intersecting where we want it around that low 20s area. So that's, to me, looking kind of tantalizing. Now this is kind of my my primary scenario that I'm currently favoring, okay? Doesn't mean it's going to happen, just means this is currently what I think is most likely based on all the information on the chart. What I think is the second most likely scenario, if this does not come to pass, and let's just say we can't get down there and make new lows, then I will just go down to this daily chart, okay? And just bear with me here. Maybe I'll get out a log scale now that we're on this time frame. And okay, this is another, so let me just get rid of the ABC for now, and we could also be doing, now this, I'll tell you why I don't like this potential triangle scenario. And the reason for it is this, to me, is just a clear 5-wave move down from our 65K top down to our roughly 29K low. To me, that is just a clear 5-wave move to the downside. Now, there's ways you can wrestle with it and kind of force it into a 3-wave move down, but to me, there's just no need to do that unless you're just forced to with other information on the chart, which that certainly has not happened here yet. But let's just, for the sake of this exercise, let's pretend that that's somehow a 3-wave move down into an A wave of a triangle. That means we just did a B wave up in the triangle. We're still expecting a sizable move down in a C wave, and then we'd have a move up in a D, and then down in E, and then we may still be looking at that, towards the end of the year finish. Now, all that this scenario really changes, I mean, directionally, we're still expecting lower prices, and time-wise, we're still expecting more time being consumed before we really get a huge move up to 6 figures. This just has a scenario where we don't actually go and make new lows below that 29 area. This just has us make somewhere in the 30s perhaps in the C wave, and then we just kind of trade sideways in a narrowing range until we finally break out to the upside after some time has passed. Okay. Now, I will add, and let me just get back to log here for a moment. I will add that there are some things to like about the triangle scenario. And so typically, you look for the guideline of alternation. So in this case, it looks like wave 2 was sharp. It's directional. So the guideline of alternation would suggest that wave 4 would be more likely to be sideways. Okay? And obviously, what is a sideways pattern? Well, obviously, a triangle is certainly a sideways pattern. But that doesn't mean, it's just a guideline. you could still easily have also a directional wave 4 that is sharp in nature as well. But just one little thing I throw in there, kind of favoring the triangle, is just that guideline of alternation. But again, going back to the daily chart, I just have a real hard time calling this a three-way move down for the A. And because of that, I'm looking for a 5-3-5 zigzag instead that would call for, lower lows below the 29 area, okay? Now, if we go in even closer here, and let me just really clean things up now that I've kind of gotten the bigger picture aspect out of the way. Let's go down to maybe the 4-hour time frame. And, or we could do 2-hour perhaps. Let's see. Sure, 2-hour. Now, to me, from our recent high here around just under 53, this is a swift rejection, okay? So that's definitely a notable reversal. In fact, let me just briefly go back to that weekly chart and throw the candlesticks up here. Now, we got a weekly bearish engulfing candlestick engulfing 1, 2, 3, at least 3 prior weeks. So that is a significant reversal candle. And we've already started, showing some weakness as well this week. We just closed the candle earlier this evening. So to me, when you got a nice powerful candlestick reversal signal along with a good wave count, and I'll also mention that, when you have those two, the combination of things that tells you it's, looking to go down here, I wouldn't ignore that. And also, I will just mention, so we're in September, and if you look back in Bitcoin's history, September is very often bad, okay? And let me just throw up some Septembers here, some vertical lines. This might be a little off track, but I think it's worth mentioning. So let's go to September of 2020. Okay, so you can see there's a lot of green monthly bars here, but look at this. September of 2020 was a negative month, okay? And that stood out among, basically almost every other bar you could find is green, very green, but September 2020, nonetheless, was a negative month for Bitcoin. I'm just trying to demonstrate the seasonality of, expecting September weakness here as it relates, which I think is important. Now, if we go to September of 2019, wouldn't you know it, that's another significantly bearish month. Okay, so we got 2 in a row there. If we go back to September of 2018, and yeah, another negative month. Okay, and if we go back to September of 2017, now I think this kind of will stand out because 2017 was, an incredibly bullish run for Bitcoin. Look how many green months we had. Okay, and yet in this huge green, rush, this big pump, nonetheless, we still had a negative September in 2017. So that is the last 4 Septembers, all bearish, okay? Even the ones that were, positioned in a fairly bullish trend unfolding, they were still bearish. And I could keep going back, but I think you kind of get the point. What about September of 2016? Okay, that was actually a positive month. But I think my point has been made that, and if you go back there, I think there's still more bearish Septembers than not. But the last 4 Septembers in a row were bearish for Bitcoin. And so far this one, we've only begun September here, but it certainly looks like that will also be the case. Okay, so I'll delete this stuff here. So I just want to get that out of the way, kind of showing the seasonal tendencies that were in here. And what was I on, the 2-hour time frame? Yes. Okay, now, just looking from our recent reversal here on the 7th of September, this looks like a very impulsive move down, and this just looks like weak consolidation before another leg down, okay? So even on the shorter term action, there's nothing, bullish here once we've gotten this swift reversal. And I think we got some more significant downside to come. Okay, daily chart. I mean, I probably don't need to go much farther than that. I think I've made my case. So basically the two, just to put a bottom line on it, we're either going somewhere, I would say, now let's see. If we are in a triangle, some common, yeah, we're not in log scale on this time frame. I don't want to be. Okay, so this was the low of our A wave. So if I measure this entire move up as our B wave, then some common levels would be, oh, the 50%, 618, 786. So if we only get a 50% retracement, that would get us to 41 and change. I think we'll go below that. But 618 would get us to 38 and change. 786 would be 34,000 and change. Then we also have the 618 relationship of the A wave. So this, if we call this the initial A down of a triangle, projected off of here, the 618 measurement, that would also be a common triangle relationship for the C wave. Oh, see, that gets us right down here to 30,000, just under 31,000. So I kind of like a move deeper into the 30,000s, even if we're just doing a C wave of a triangle and not going to make new lows, okay? So there's that scenario, or there's that initial scenario, which I'm still more heavily favoring, and that's where we get closer to that 20,000 mark in just a simple 535 ABC zigzag into, you know, roughly the end of the year. So that's what I'm looking at here. And then after that, I believe when the correction completes, whether it be a triangle or just a zigzag, I think that's when we'll launch up into next year and, you know, go for that 100,000 plus target in wave 5. But I think there's just still some more time to consume and probably some lower price levels, at least from our current juncture, before that happens. So that's my take on Bitcoin as it currently stands. All right, Serial Trader signing off.